Howdy, everybody. Welcome to Liberty Call. Today is Thursday, October 24th, 2024. Hope you're having a great day out there in the interwebs. Beautiful day here in Colorado. I mean, not hot, not cold. It's just perfect. I got shorts on. Wonderful. Anyways, like I said, hope you're having a great day out there. And markets kind of mixed today. So some things were good, some things were bad. But all right, well, before we get into the numbers, if you, yes, you, I see you there in the yellow shirt. If you could give me some thumbs up, like, a share, subscribe, a follow, and press that notification bell. All righty, well, let's get into the markets for today. Dow Jones was down a third, 140 points, closed at 42,374. S&P 500 up 0.21%, 12 points, closed at 5809. The NASDAQ was up 0.75%, 137 points, closed at 18,413. VIX was down 0.83% today. It's at 1908. Canada down 0.09. Brazil up 0.65, and Mexico down 2/3. Let's see here. Germany was up 0.34%. The UK up 0.13%. France up 0.08%. Netherlands up 0.67%. Spain down 0.21%. Italy flat at 0%. Switzerland up 0.24%. And Portugal down 0.45%. Russian exchanges both red again today. The MOEX down 0.6%. RTSI down 0.7%. And the Asian markets, the Nikkei was up 0.26%. Australia down 0.12%. New Zealand flat at 0%. In China, the Shanghai was down 0.68%. The Shenzhen component down 1.27%. China A50 down 0.98%. DJ Shanghai down 0.74%. Hang Seng down 1.3%. And the Taiwan weighted down 0.61%. All right, so those are the markets for today. So like I said, kind of mixed. All righty, well, let's go ahead and hop into our market recap. S&P 500 snaps 3-day losing streak as Tesla rallies 22%. Woo, big jump there. All right, let me get my notes. The S&P 500 ended a 3-day losing streak on Thursday, driven largely by Tesla's strong third-quarter performance and positive future outlook. Remember yesterday they were talking about how, their robotaxi didn't have a good debut, and that, they were worried that Tesla was going to have rough numbers today. Well, they were wrong. All right, Tesla surged 22%, marking its best day since 2013 after reporting robust profits and projecting 20 to 30% sales growth for the next year. Improved margins, particularly gross margins excluding credits, which rose to 17.05% from 14.7% the prior year, were key factors in the earnings beat. Tesla's optimistic delivery forecast boosted market confidence, especially since the company faced stiff competition in China and other saturated electric vehicle markets. Analysts now anticipate margins returning to 20% by the second half of 2025. Tesla is the first of the major tech giants, or the Magnificent Seven, to report earnings this season. Its positive results sparked hopes for similarly strong performances from their peers like Alphabet, Microsoft, Meta, and Amazon, which are scheduled to release their earnings next week. Elsewhere, 29% of 29% of S&P 500 companies have reported earnings so far, with 81% beating expectations. Notable movements included Boeing, which fell 1.4% due to an ongoing labor strike, and Southwest Airlines, which rose 5.5% after reporting a surprise profit and nearing a settlement with Elliott Investment Management. United Parcel Service also saw a 5% rise after exceeding earnings expectations. In economic news, U.S. jobless claims fell by 15,000, indicating continued strength in the labor market. Investors are also watching political developments, with a new poll showing Donald Trump leading Kamala Harris 47 to 45%, suggesting a close 2024 presidential race. Well, yeah, I'm sure when every dead person in Chicago votes, it probably is going to be a close race. All right, next up, September new home sales. This comes to us via First Trust, Mr. Bryce Gill, who put this report together. So let's see what he had to say. In September, new home sales surged to their highest level in 16 months, continuing an upward trend that began late last year. Unlike existing home sales, which are recorded after the sale is closed, new home sales provide a timelier indicator of the housing market, as they are counted when contracts are signed. The anticipation of Federal Reserve rate cuts and the recent announcements of these cuts may have prompted some buyers to enter the market for new homes. However, the recent rise in mortgage rates, up by over 50 basis points since the Fed's announcement, casts uncertainty on whether the sales increase will persist. Despite rising rates, there is some good news for potential buyers. The median sales price of new homes has dropped 7.4% from its peak in 2022. This decline is partially due to lower price per square foot as developers cut prices. The Census Bureau reports that median price per square foot for a single-family home fell 1.1% from 2022 to 2023, reversing a sharp 45% increase seen from 2019 to 2022. The drop in prices is also driven by an increase in lower-priced homes entering the market. Additionally, the supply of completed single-family homes has increased by over 200% compared to the low point in 2022. In contrast, the inventory of existing homes remains limited, largely due to current homeowners holding on to low fixed-rate mortgages secured during the pandemic. With lower prices and more housing options available, new home sales may continue to rise despite higher mortgage rates. In other news, jobless claims fell by 15,000 to 227,000, while continuing claims rose up to 1.897 million. All right. So it's kind of a good news, bad news. People in existing homes aren't selling, but they're building new ones. I mean, they're building a ton out by the freeway on the way up to Denver. So I guess people are buying them. So it's unfortunate they're all that empty land is going to one day have houses all over it, which is kind of sad. All right. Last up. Got an article from Zero Hedge. Firms are worried. U.S. manufacturing survey signals third straight month of contraction. Well, that sounds positive. The preliminary October Purchasing Managers Index, PMI, data from S&P Global showed mixed results, with both the manufacturing, 47.8, and services, 55.3 sectors slightly exceeding expectations. While the manufacturing sector saw a modest improvement from the previous month's 47.3, it remained in contraction territory for the third consecutive month. On the other hand, the services sector experienced steady growth, continuing to drive the overall economic recovery. Recovery from what? We haven't had a downturn. Okay. According to Chris Williamson, chief business economist at S&P Global Market Intelligence, the data indicates that the U.S. economy continues to expand at an annualized growth rate of approximately 2.5%. New orders reached their highest levels in nearly a year and a half, and though the growth was mostly limited to the services sector, competitive pricing contributed to lower selling price inflation for goods and services, which is consistent with inflation running below the Federal Reserve's 2% target, but it's not. Despite the positive economic signs, business remains cautious, with modest payroll reductions reported for the third straight month. This caution is driven largely by uncertainty surrounding the upcoming presidential election. However, business leaders' confidence in the year-ahead outlook has improved, particularly in the manufacturing sector, as they hope for a more stable post-election environment conducive to growth. The PMI data reflects a resilient economy, but also highlights the lingering concerns over political uncertainty and its potential impact on hiring and production in the coming months. All right. So that is everything for today. Got through it quick, as opposed to yesterday where I rambled forever. So, all right. Well, like I said, that's all the stories or articles I had to cover. So if anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So feel free to give me a buzz. All right. Well, like I said, that's everything I had. Hope everyone has a wonderful evening, and I'll talk to everyone again next time. Adios.